Hello, everybody. Welcome to Monday. The S&P 500 was down 2.4% today. A little bit of an accomplishment, actually. It was down more than that at one point in time, unfortunately. It opened up down and kind of stayed down all day with a little rally at the end. And really, the reason it seems to be opening up down is because of the threats against Chairman Powell, who's the Fed chairman. Um, One of the things that's considered, sacrosanct is that the president, lets the Fed be independent, make their own decisions, decide when they're going to raise rates or lower rates. And in the first term for Trump, lots of pressure on Chairman Powell during the period of time that he was raising rates. Which was the end of 2018, to lower rates, and actually ended up starting to lower rates, which was kind of interesting. This time they're talking about, not doing anything because the tariffs are so high that they could cause inflation, so they can't lower rates to support the markets and the economy, like might be done normally if we were having these kind of problems without tariffs. So it puts the Federal Reserve in a bind. They're probably doing the right thing, which is basically nothing. You can't really tell. Like they said, are these tariffs for real? We went from a 2.2% net tariff to a 27% net tariff now. But that could drop down dramatically with some negotiations with China, which is currently at 145% tariff. So that's the issue. I think the other thing that's happening too is just over the weekend, people are starting to realize that China could actually win this trade war. First of all, they started prepping for it in 2018 after the last trade war started backing off. About 20% of their exports were going to America. That's down to about 15% now. They started developing other markets. They started to develop their own internal market and such too. And obviously, I think they're, as a country, they're more prepared for the pain than the U.S. is. We were actually doing quite well. And so all of a sudden to have this painful situation that is caused by the thought of trying to, employ all of these tariffs. And so this is kind of an ongoing thing. We are looking at what is being said and done in terms of how we should be managing the money. Most of the money is, not in the market and the stock market anymore. A lot of money in T-bills and ultra short-term bonds and short-term treasuries and those types of things. And the idea there is just the sense of, hey, the market's not really the place to be quite yet. There could be some great opportunities. The worst thing about this particular downturn is that it could change tomorrow. So if this was a normal situation like 2008, where we were seeing, economic decline, starting to see unemployment come up, or seeing different things that you could point to see, hey, the economy is starting to have troubles. You could make changes based on that. Here, we could change our mind about tariffs, or somebody else could change their mind. Again, the courts are out there. These tariffs are being challenged in court as, not being an emergency situation, which is the only way the president can do that. Who knows? The Supreme Court might be upset about some of the other things that have happened, might actually rule that these tariffs are not valid. Market could take off. You could have a situation where, the pain gets so great that even the Republican Congress decides to take back the tariff power. These things are all smallish possibilities. And I think that's why we are mostly out of the market, just because when you look at the overall situation. But if you look at what has happened, okay, over this weekend, just what's being said when you're threatening the Federal Reserve chairman, who's supposed to be independent, that's not a good thing. Market doesn't like that. I think if you fire Chairman Powell, the market will not like that at all. It's part of what we get here in this country is kind of this premium for stability. Our bonds do better, our bonds sell better, our yields are better because of our stability. Our stock market has been the greatest stock market for most of my career. Unbelievable. And now we're starting to question that because of this tariff situation, kind of the erratic nature of how those tariffs are being employed, the calculation for the tariffs, being half of the trade deficit, the misunderstanding about what a trade deficit is and how that works. All these different types of things are creating a scenario where the American trade, whether that's for stocks or bonds, has been dissipated. Now, they can be get you can get that back pretty quickly as far as that goes too. So this is where you kind of have to hang in there with a little bit of equity exposure until we kind of see further, what's happening here. Again, China could come to, the table and start talking. I don't think it will be China that comes to the table. Personally, I think that Trump will find a way to, talk to China himself. He probably would be the one that blinks here. Ironically, America's kind of in the worst position here for some of these tariff negotiations. The whole strategy will be trying to get the rest of the world to side with you. So if you're America, you're going to Asia, you're going to Europe, and you're trying to get all of these deals together. Unfortunately, we've kind of didn't do a very good job of making them happy with all the tariffs that we slapped on them also. And so here's China running around. They've been having all kinds of meetings with Vietnam and Thailand and what have you. They're trying to gather up, trade agreements outside the US, and they're actually presenting themselves as the stable party, which is not normally where they are. And so they may have a chance here to kind of get in with Mexico and Canada and Europe and Asia and such too. So that's the end battle, is who ends up with kind of the best worldwide trade agreements altogether. And the U.S. is the buyer, so we do have some power there. So, but we'll have to see how that plays out. That's what's going on behind the scenes. Unfortunately, I think over the weekend there was a lot of realization that China has a pretty good position here. Like we said before, they control 90% of the processing of rare earth metals, which, if you're going to make a smartphone or what have you, you need those rare earth metals. So they control us, in that regards, along with the large chunk of treasuries that they have, that they could sell off and create instability in our treasury market, et cetera. So they've been preparing for this for a long time. And their industries have been preparing for a long time. We've only had a few weeks for these industries to figure out what to do, and there hasn't been enough stability for them to really do so. So we're going to have to see how this plays out with Trump and what goes on with the market. So anyway, look forward to being able to talk about this tomorrow. I am, okay with where we're at. You got hang in there as far as that goes. We're in a pretty good stable position. Most advisors that I know are still fully in the market with exactly the same allocations they had before this started, expecting things to get better. I hope they're right, honestly, and I hope we're wrong. But it's just one of those things when you look at the risk calculus here for what could happen. And unfortunately, once you do these types of things, you never know what could happen. You put things under pressure, you don't know what might happen. Like what we had in 2008, markets came under pressure because of a lot of bad home loans, and it ended up that Lehman Brothers failed, and that exposed this whole thing called a credit default swap, and that created a much bigger downturn. So those types of things are what can happen when you do this, and that's why they're kind of playing with fire here. It's why there should be some, expectation to have a little bit less exposure to the markets at these points in time. So anyway, we'll see what happens tomorrow. Again, I do think there's unbelievable opportunity in here at some point in time. These same great companies that were setting an all-time high in February are still there, and there'll be some chances to really, make some really good returns, I think, at some point, but we just have to wait and see when that point comes. So look forward to being able to talk to you tomorrow. Thank you.